Hey, what's up? What's up, everybody? Vuyo Chefe Azek. I am Sami. Most welcome to the space. We about 10 minutes late, but never too late. Adrian, what's up? How you doing? Yeah, so I'm just gonna wait for some people to join in so we kickstart into this. So today we're gonna talk about the psychology of forex trading, the psychology of forex trading. There is a post that I made actually indicating everything that we're going to cover today. Let me feature it on the chat up there. Just give me a minute. Let me feature that on the chat just in 1 minute. And please go ahead, use the hashtag Forex Trading Simplified. And also, you can be able to share this conversation on your timeline. Let's have as many people joining. As many as possible. Let's have a discussion. So, what are we going to talk about today? The psychology of trading. I'll tell you guys, trading is never a straightforward thing. Today you may be using a demo account and you think, no, I'm going to think better when I move onto the real account, or I'm going to be a better trader, or maybe what I'm doing now, it's because the money I'm using is no real cash, it's bonus money, so you make any trades, you do anything that you want, you enter trades at the wrong time, you really don't care, like you this hustler that doesn't give an F when you're doing your thing. Hey, dangerous strides. And I'm really so excited for today's topic because it's gonna really shape and teach us some behavior, some ethics, as far as forex trading is concerned. It's going to teach us how should we make those decisions. So without further ado, allow me to welcome our main speaker tonight. Ivan, how are you doing, man? Ivan, can you hear me?
Yeah. Sorry, my mic was still on mute. I didn't know.
Fantastic. We're happy you're here, man. How are you? How have you been? We last spoke on Thursday. It's been a long weekend. Tell us, how is South Africa? What's trending there?
We are good this side. Nothing much is trending actually this side. It's just we are in spring, so at least no coldness anymore.
Fantastic. In Kampala, we have a few trending things. Of course, the latest one this evening is the cancellation of Nyege Nyege. Have you heard about Nyege Nyege?
Yeah, I used to be a big fan.
Yeah, so I understand our parliament had a very, very serious discussion today, discussing the morality and
I had I heard this
you
guy
had what?
wanted to cancel it. Is he the one who died? The one who was
Yes, the
Minister
guy
of
who died.
Ethics?
Yes. The one who passed on, Father Lukodo. Father Lukodo
Yeah.
wanted to cancel that thing. I don't know. That thing is not easy to cancel. So whoever wants to cancel it must be very, very steady. Just kidding
Uganda
there, but
doesn't Uganda doesn't realize it's the biggest function it has throughout the year that brings in a lot of money from tourists who are coming for enjoyment.
yes, it is. And of course, also, I think the issue of morality that was being discussed, unfortunately, it was being discussed by people who actually don't even have any experience of that event. Being the event that is so big and, people dress in any way they want, I think people have the psychology of like, it must be immoral, it must be this. But I have attended
In
that event 3 times, and
in this,
let me tell you the truth, it does not have any immorality that is extraordinary that you would think about. And then it does not admit young children, it's adults. So I don't know why Parliament is so fixed on checking the morality of the event, but yeah, we will watch the space.
in this generation, you still tell people about morality.
It's actually almost a complete joke. But anyway, since we're going to talk about the psychology of trading, I mean that is also the way the people in parliament are perceiving the event they have never attended. That's the unfortunate bit. But we will watch the space. We will watch the space. I've seen many people reacting. I hope they will be thinking and deep analysis of the event before they do cancel the event. So let's kickstart our topic today. JJ, most welcome to the space. So the psychology of Forex trading. First and foremost, what does the psychology of Forex trading mean, Ivan?
Psychology of forex trading is way different from what the psychology you would know that you use in other things. But first of all, before we start, I see the attendance today is so low, and we are touching a very important topic. I feel sorry for those people who are going to miss it because
I think maybe they'll join in. The weather is also known that the best, and also maybe being a working day, usually when it rains a bit, there's a lot of jam. But I hope people will be able to join in. Maybe I'll just ask those that are already on the space, please just share out the link on your timelines. Tag some of the members you know are always present here so they can be able to benefit from this discussion.
these, these things I'm teaching here, people pay a lot of money to learn them. They just don't know the value of what we are teaching here. And for some people who have been attending, who have been taking it serious, to miss such a session, I feel sorry for them because this session it might even take longer than the usual sessions, but it will be worth it. And those who will attend today, I'm sure they will benefit a lot from it because it's one of the things that in forex trading, if you don't take it seriously, no matter how good you are, you'll never win. You'll never be profitable. So the trading psychology that we are touching on today, I hoped like most people are going to come because I don't think even those who are going to listen to the podcast, to the space after, are going to understand it like the ones who attend and listen to it very carefully. So that aside, we'll continue with those who are available and go forward. Yuga man.
All right, yeah, I think we actually can get started. I just asked members to share out the link to make sure that we can be able to invite more people. But for those that have kept time and are here, I think we get started so that we don't keep them waiting for so long.
Okay. First of all, this session for today will be one of the most insightful information you'll ever hear about trading. However, before we go into all that, there is a big but that you need to understand. If you don't use the information that I'm going to share today, it's even worthless for you to be here attending. It doesn't help anyone to be here attending and listening to all what I'm going to say if they're not going to put in practice what we're going to talk about today. Because trading psychology is one of the things that mostly people talk about, people learn, people hear about, but they never put it onto paper. They never put it into practice. They never put it into their trading style. We, as human beings or as people, we're not naturally built to be traders. Trading goes against the majority of what we've been all taught growing up. Most of us have been taught that losing is bad and winning is good. That's all we know. So, for us as humans, trading is very, very bad for us because trading is all about Losing is good and winning is bad. Reason being, if you're winning every day, you're not going to learn until you lose. And the day you lose, you might lose all the wins you've made in trading. And losing every day, no, even if you don't lose every day, every trade you lose, you learn a lot from it. And you take those lessons and use them to better yourself in the next coming trade. So this is like a design on default that has been back, if you're to trace it, it's been back hundreds of years, that we are meant to see winning as what we are supposed to be doing or what we're supposed to take. And losing is not meant for human beings. If, like, for example, if you are to go back thousands of years back, people used to see winning as putting food on the table. As long as the husband can provide food, or and the woman can cook, the family is okay and everything will go on very well. However, times have changed and that's no longer the case. But although times have changed, we are still the same humans. We haven't changed that much. And we still have, most of the times, we still have the same mentality. That's why you find parents will force a kid to go to university, do a degree in medicine, when that kid is not even interested at all to be a doctor or to work in hospitals, and they have a lot of other things that they're interested in doing. But because their parents want to be seen in society as they have kids who are winners in life because they are doctors, as society perceives it, they will force their kids to go on and do what they don't want to do. But they forget one thing, that what they are forcing the kids to do is not going to affect them, but it's going to affect the kid. You're going to go and do medicine or do law or engineering when you're not interested in it. And after that, you'll go to work on a job that you don't like. You force yourself to wake up every day to go to work, which work you don't like. And you think already you're going into that job with a negative mentality about it. So for you to wake up every day to go to a job that you have a negative mentality about it, or something you don't like to do, you're already losing before you even have to lose in reality. So that's the mentality or the psychology I'm talking about. Like, we are meant to be winners, or we are built to be winners, but in actual sense we end up becoming losers, not by choice, but by what society wants from us and what we want to look in society. However, as I've said, times have changed, but humans haven't changed. And if you want to succeed in this industry of trading, you need to rewrite your current programming. What do I mean by this? I've been in the trading industry not long enough, about 4 years, but here is what I have to say from what I've learned about the trading psychology. A lot of people will come and say, will give a lot of excuses. They will give any excuses for their losses. If a trader is losing, they will make any excuse from anywhere. They will create an excuse to make sure that people know that it was not their fault. Some will say, it was my indicators that lied to me. The indicator today told me I should buy, but there is something I didn't put. I was supposed to sell. I saw it, but I was like, let me go with my indicator. Another one will come and say, my strategy is not good. They will blame it on their strategy. Then another person will say, support and resistance doesn't really work. That's why I'm losing out these days in trading. But There comes another trader who will say, who will use the same strategy you're saying is bad, and they will use it and win. And another one will come, they will use the same indicator that you were using to lose, and they will use it to win. And as you say, support and resistance is not good or doesn't work, somebody else will use it and it will work for them. So ask yourself this question: what is the problem here? Why are other people using the same things that I'm using and are winning, but me, I'm losing? That's the question we are going to answer today and talk about today. For those who are new in trading, of course, if you haven't practiced it in reality, this will come off as if I'm talking maybe nonsense, or you'll be like, those are the things that we hear everyday traders talking about. But once you start trading, you will see for yourself that the things I'm talking about right now are the same things that you're going to go back and do and make the same mistakes. So I was asking you, as other people are using other methods to win, and for you use them and you still lose, then the question comes, what's the problem? The only problem is you as a person. You remember when I was starting, I talked about how we meant to be winners. So that's where the whole problem starts from. And the only person who can solve that problem or who can put it in order is you. You're the only person who can change your trading style using what every other trader uses to become profitable. And other traders will fail to become profitable using that same thing that you're using. So, how are we going to change this mentality you have? Some of you have gone to YouTube, listened to psychology videos about trading and read books, everything, but you're still making the same mistakes every day. And ask yourself why you're not learning. It's because you haven't woken up. You want to have coffee, but you're still in bed. If you want to have coffee, stand up, go make coffee, and you'll have it. But if you stay in bed and think that coffee is going to bring itself in bed, then you're not going to have it. So, if you want to change your mentality, start with the small things. If you want to change your trading psychology, start with the small things that surround you. For example, if you wake up and you know you're supposed to make your bed, but you leave it because you're lazy, ask yourself why. It's because you can't do the small things because you think no one is watching you. Those small things that you do in hiding, that you do in private, that you do and you think nobody's watching you, are the things that matter the most. Everything you do behind closed doors, in darkness, in private, defines the person or the trader you are. What you do when other traders are there doesn't define the type of trader you are. If you're gonna trade when you're with another trader and you put a stop loss so that people see that you use stop losses, and then when other traders are not there, you not use stop loss, you're only cheating yourself and you're taking yourself 100 steps backwards in trading. If you don't, if I'm teaching you here and I tell you, please, if the trade has reached where you know you're supposed to get out before you lose more. And you don't get out in that trade because I can't see what you're trading, or I'm not there, and you don't want to lose. You're only putting yourself in a bigger hole that you'll reach a time when you can't come out of that hole. That trade is gonna sink and sink and sink more. And by the time you decide that, oh, what they said was true, now I should get out of this trade, your account will also be getting out of the market. So these are the things we are talking about today. And as I've said, start with the small things. Look at the place where you stay. Start by cleaning it. If you're working in a dirty environment, even the work you're going to do is going to be dirty. If you can't wake up and make yourself a cup of coffee, yet you know you want it, then who's going to make it for you? No one. If you know you have dirty laundry that you can't go and wash, who is going to wash it for you? Those are like the first things that are supposed to set up your mentality. You might think those things don't affect me in my trading, but those are the things that affect you the most. Because if you have a routine and you have to follow it, you're supposed to be the teacher, the master of your own mind, to control it and tell it, this is the right thing that I'm supposed to be doing at this time, and you should do it. If you don't force yourself, because in this world, there are things that you need to force yourself to do. Even when you feel lazy, you know that for me to lose this weight, I have to eat healthy. But you still find yourself eating unhealthy ways. You think you're helping yourself? No, you're just harming yourself more. So those are the things I'm talking about. You start with the small things. If you know at 8 a.m. I'm supposed to go to the gym, wake up and go to the gym. At 5 p.m. I'm supposed to go for a run. Those are the things that are going to teach you what you're supposed to do in trading. If you know I'm supposed to get out of this trade, get out. You know I'm supposed to hold this trade, hold it. You know I'm supposed to leave the markets now. They are not. I've made a lot of losses, and I should stay away from the markets for the time being, and you still stay on the markets. You're making yourself lose out even more. So in trading, you're not trading against the news or technical analysis or what, or the charts or the lines. You're not trading against that. You're actually trading against other people like you. They also have fear, they have greed, they have hopes, they have dreams, they have desires. They want to make money like you want to. So just know what you're doing. There is somebody else doing it the opposite way out there. If you're holding a trade in loss, there is somebody who maybe has it in profit and is holding it in profit. So the market is going their way and it's not going your way. When you're buying, other people are selling. You're trading against other people. If you think you have fear in the market, the other people you're trading against also have fears. If you think you're trading to make money, to reach your dreams, or maybe buy a house, there is also the other people who are trading also want the same thing. If you're trading maybe to build your mother a house, or another person is also trading to build their grandmother a house, and they also want to withdraw, like you want to withdraw. So they are also looking for profit the same way you're looking for it. So we're going to talk about the things that you need to work on slowly but surely, because with trading psychology, I'm not going to lie to you. Even if I'm talking here, I know it's not going to be an overnight change for you. It's going to take time, and don't beat up yourself that you're not doing the things the right way. No. As I told you, I'm going to teach you to accept losing. That's what I want us to learn today. I want to teach you to be a losing trader so that you become a profitable trader. There is a difference between the two. A trader who accepts losses but is a profitable trader, and a trader who doesn't accept losses is who wants to win 100%, but there will be a losing trader in the long run. Before the internet came or everything became so easily available, you would, if you wanted to learn what I'm teaching right now, you would pay for a seminar and you'll have to go put in transport, go to that place and sit down for that lecture. Or maybe it can even be a course. You have to pay for that course. You have to go to another area where you don't live or even leave your country and go to that place to learn trading. By the way, the things I'm teaching here today are not only going to help you in trading, they're going to help you in your day-to-day life of how you do things. It might even be your business that you're making losses. And there are certain things that are making you lag behind. There are certain things that are keeping you from winning. But you know them. The only problem is you don't want to accept the bad. You only want to accept the good. So you also have to accept the bad before you accept the good so that you know your mistakes, you know how to control them, you know how to come out of them, and you know how to get out of them. As I was saying, before we got internet and everything became available for everyone, we used to pay. You pay money, you go somewhere in a lecture, maybe certain place. You also have to use your transport to go learn one thing that you can just now put on YouTube if you have data or Wi-Fi and learn that thing in a second without even leaving your bed. So even in trading, like these days, you know, there is fundamental trading, which is news trading. Those days, people who got the news first are people who had connections, people who knew people in governments, people who knew people in higher places. So they used to get the news that are going to affect the economy first. And when they get those news, they used to not share them because they want to be profitable. And those who didn't get the news, they would lose out. But these days, everything is fair. The news come through apps, websites, and very many ways. The person who is in UK, who is in America, who is in Canada, they will receive the news the same second. It won't even take 5 seconds. I'll get the same data they've got of the news. So this doesn't have to affect your trading because you have no excuse here. You have everything that you need. There is no one who is trading having an edge on you. Everyone is using, every retail trader, they are using the same tools, the same things. There is no one with a magic button that they are using to trade. Whichever thing you want to use to trade is out there. If somebody is using an indicator, that indicator is out there. If they are using fundamentals, everyone gets to see them. If they are using technical analysis, price charts, price action, everything is out there for everyone. So you have no excuse why you're still losing in trading. So when we go to technical analysis, early technical analysis of charts and visual patterns, the principle behind it was driven from financial markets over hundreds of years. There are many technical analyses used today in the markets, but let's talk about what makes a difference here. What makes a difference is when you place a trade, when to close a trade, and when to take profit on a trade. Those are the three things that make the difference in trading. In order for you to be consistent and make profit in Forex trading, you must understand how other traders trade. However, With the rise of speculation and advent of zero-sum game thinking, it is clear that the participants following classical technical analysis will not all be successful because everyone, they use their own way of trading. Some other people, they will come in and use the same technical analysis that you're using, but use it the opposite way. So even if you're using an indicator and somebody else is also using that same indicator, and you think when the indicator says buy, you'll expect everyone to buy. No, other people are selling. And when those other people are selling, it means as you who is also using the same indicator who has bought, there are people who are changing the direction of the market because they are not trading the same way as you. There, most people these days are speculators. Others go in the market without knowing what they are doing, and those people also affect the market. You won't see it, but it will affect you in a way that you don't know. So I want us to take a random walk of how we're going to solve this. And we're going to talk about ways of forecasting methods on past data, invariably since price follows a random walk and essentially unpredictable. As news and information is instantly discounted in the market price only, unpredictable information makes the market move to allow profits. Therefore, the ability to extract profit must reside outside analysis based purely on past history. This creates weakness of technical analysis, but that doesn't create weakness on your way of trading. As I've said, you want to know when I'm entering a trade, what do I have to do before I enter a trade? When I'm getting out of that trade, what do I have to do? And between entering and closing the trade, you also need to learn certain things that you have to do. You have to know that you have to prepare yourself first before you enter into a trade. Let's say you have your strategy. You have to make sure that whatever your strategy says, or whatever the indicator you're using says, it's saying buy. Okay. The indicator is saying buy. That's good. Now buy. If the indicator is saying sell, you don't have to do anything else. If you're using that indicator and it has been working for you, do what the indicator is saying. But before you use the indicator, remember you have to do what we call backtesting. Backtesting in Forex trading is like going back to learn and test everything. For example, if you're going to buy a car, you do what they call a test drive. You can't just go and buy a car and most especially on used cars and take it home. You have to do a test drive. You check everything. You do every checkup necessary and also take it for a ride and see if what you're buying is really as they said. So also in trading, if you're going to enter a trade, check everything, look through, go back, do a back test, see how is this strategy profitable? How is it? How many times has it been making profits if I use it? And how many times has it been making losses? How can I, if it has been most of the times, if it has been making losses, how can I make it profitable? How can I improve it? If you trade it, start on a demo, start trading it. If you trade it and you start on a demo, then look at the things that made you make a loss. Note them down for reference. Trade it for like a month or two and put your notes together. You can also, like, for example, you can put different reasons that made a loss. For example, if today what made you make a loss was you getting out of the market late and maybe you wanted your take profit at 400 pips and the market turned at 200 pips, then you note that sometimes the market turns at 200 pips. And throughout the period of your testing, check how many times has the market turned at 200 pips. And okay, if it has turned at 200 pips most of the times, it means that most of the times I have to turn when the market is at 200 pips. I have to go out even before, because you don't want to leave at the exact point the market is turning. You have to leave and leave a gap for the market to breathe. So, note those things down and tick. Today, the market turned at 200 pips. Okay. How many times did it do this in the period I've been backtesting? 20 times. Okay. What else? How many times have the fundamentals affected my strategy? 20 times or 10 times in this period? Note them down and tick them. So go back on everything. See how many pips your strategy can go in loss. The highest times your strategy can go in loss. Read the candles. See how many, which candle does usually shows a turning point on my strategy. Okay, look at that. Maybe it's the evening star or the hammer. Note it down. How many times has the hammer turned? Has my trade turned on the hammer or the evening star or the doji? Write them down. That's what we call backtesting in trading. Also, these days on MetaTrader 5, if you're using a laptop, you can easily backtest. It's very easy. You just put in the parameters of your strategy, and we will learn that when we start doing practicals. We'll learn how to do backtesting, and you will see how you can easily do a backtest using your laptop, and even without you noting down everything, because a laptop can help you to do a backtest even, or I mean MetaTrader 4 or 5 on a laptop. You can do a backtest even 10 years back or even 20 years back, as long as the charts or the indices you're trading or the currency you're trading goes back to as long as you want to test it. But again, remember, last time when I was teaching here, I told you past results don't guarantee future results. If that strategy was profitable in the past, it doesn't mean in the past 10 years, it doesn't mean it's going to continue being profitable in the coming years. Things will come out like coronavirus. It will change the whole market situation. The Russian war, it will come and change the way we will look at the whole market. So it means like, as long as you trust your strategy, you have to also keep up with the current trends and know that certain uncertainties will come in the market. And that's the importance of using a stop loss. If you don't use a stop loss, you'll get caught in the market from something that you're not ready for or you don't know. For example, I was in a trade in in March. Was it March 2020? I was in a trade of I think it was USD CHF. If I wasn't having a stop loss, that trade made a loss of about 1,200 pips in like less than 4 minutes. In less than 4 minutes. But what helped me was that my stop loss was at 40 pips. And even sometimes when back then I was using a trader who were not so specific with their slippage. So I made a loss of about 100 pips. But still, it was because I had a stop loss that helped me. But when the market runs that quick, some brokers don't take you out as quickly as possible. They leave you in the market and you end up losing more. That's why we'll also talk about brokers and we'll talk about why you have to use what we call the STP brokers. And we'll explain what STP brokers are and why you have to use those kinds of brokers. So, as we continue, we're talking about the problems that you will face.
Ivan. Ivan, I think Track Official has a question. There is someone here requesting for the mic. Let's just give them a moment to say, I think they have a question they want to ask you. Track Official, are you there? Track Official? Track Official, please unmute yourself and go ahead. Okay. Hello, Track Official? Okay, looks like he's struggling with his
He's on mute.
unmute and mute button. Yeah, it looks like he's tapping it twice and he unmutes and then mutes himself again. Okay, go ahead. Wait, when he comes through, maybe he will be able to ask.
Track Official, can you unmute yourself? Okay. Let's continue. I was talking about back testing. After doing your back testing, you'll have a strategy. So we're on having a strategy. If you have a strategy for your trading, then that's the first thing that you need to do. What is your strategy telling you to do? Look at everything that your strategy is telling you to do, and then execute it as your strategy is telling you. You don't even look at what other traders are doing in the market. It will confuse you more. Your strategy might be telling you to sell at this point, but you're in like different Telegram groups or Discord groups, and you see other people are buying when your strategy is telling you to sell. Please don't even mind them. Do what your strategy is telling you, whether it will be wrong or right, but you'll be doing what you're supposed to be doing. You're not trading rationally. Don't become a trader who'll come out of the trade with an excuse and say, okay, I wouldn't have taken their advice. I would have gone on with what my strategy was telling me. And again, if you lose that trade, you'll be like, at least I followed my strategy, which has been always winning. It means if I've lost today, then go back to that trader and be like, okay, I lost, and I saw most traders in the groups I'm in, they were buying. So what's the reason to why they were buying? Look at it and analyze it, and maybe you'll find it's a new clue that you didn't know about that has affected the market. And then work on it next time so that you don't get affected by it. Okay, now your strategy has told you to buy or sell. Your strategy is telling you to sell. How do you execute your trade? First of all, before you execute your trade, how much do you have in your account? You have $1,000. Okay. How much are you willing to lose on that trade? How much are you willing to risk? Of course, you can't risk the whole 1,000 on one trade. Because you have $1,000, you want to risk it on all of it on one trade. You're gonna end up going into depression after you lose out because you're not 100% sure that trade is going to win. So what you have to do is go back and check yourself. It's say I'm having $1,000. Okay, on this trade, I can afford to risk at least 10% on this trade. What is 10% of $1,000? And you'll be like, it's even 10% is a lot, but as long as you are able to risk that amount, you can risk it. But if that $1,000 is your last money and you know you don't have any other money, don't risk 10%. At least risk 1% is enough. 1% is $10. Yuga man. Yuga man.
Yes, Ivan, I'm here. I was actually posting something when you stopped. Yes, I'm here.
I want to send you some pictures of. I promised these people last time to give them a strategy of
Yes.
finding the right lot size to use. So I want to send you a picture that you can give to them.
Okay, fantastic. You send it and I'll be able to post it
Okay.
and then tag it here. Mm.
Okay, because I want to send it to you then, so that you can do what? You can post it, and I explain to them as they are looking at it.
Okay, let me do that as soon as you send. I'm gonna post it.
Okay.
All right. Guys, as Ivan is sending the picture, please go ahead and ask for the microphone. Track official, you did ask for the mic and failed to unmute yourself. The technology of unmuting oneself, track official, we missed out on your point, but you can still go ahead and request for the mic and make sure you unmute yourself so that you have your say. Josh, everybody, David. Okay, so track official has requested for the mic again. I hope this time around he can unmute himself. You know, it's like locking yourself in the house and you you can't unlock. Yeah, track official, are you there? Please don't mute because you muted and we missed you. Yeah.
Yeah, struggling with the button.
Okay, please go ahead. Please go
How are you
ahead. Ivan is listening.
here today?
Doing good. Doing good.
My question today is, what are the factors does a trader need to put under consideration before they place a trade? That is the question
I think
today.
that's what I'm talking about currently, right?
Yeah, but I think you should try to dig deeper because I'm not trying to understand you properly.
Okay, I think I need to put it in a form of points. The first point I was talking about, I explained it for over 20 minutes. I talked about uh, finding your strategy. And in finding your strategy, I talked about doing back testing. And after doing back testing, then you know how to use your strategy. But as some of you here are new, you want to know how to find, are new in trading, you won't know how to find a strategy. I'm only saying find a strategy if you're an experienced trader. For those who don't know how to find a strategy, who don't know what it even means, we are going to be teaching about these things as we go on. Right now, we are teaching trading psychology. And in trading psychology, you have to know the steps you need to know before you take your first trade. So, even when you're trading on a demo account, for those who are new, we're talking about how you have to follow these rules. Remember, whether you're trading a demo or a real account, some of you go and get a demo account of $100,000, very well knowing you can't afford to fund an account with $100,000, and you'll practice on an account of 100,000. Yet when you start trading, you'll only fund with $100. So it won't be realistic. Once you go open a demo account, look for a demo account for the amount of money that you know. Once you start trading, it's the same amount of money that you're going to use to trade. If you can afford $10,000, practice on a $10,000 account. If you can afford 500, practice on a $500 account. Actually, if possible, practice on a lesser account than what you can afford. If you can afford 100, practice on a $50. If you can afford 500, practice on 250. Meaning, what do I mean in this? It means if you can be profitable on a $250 account and you make money and maybe you push it to 500, it means if you have a $500 account, you can do the same thing. But if you practice on 100,000 and then come back and trade on a $500 account, you're not being realistic to yourself. It's like learning how to drive a car, but you want to be a pilot. Once you start with learning to drive a car and you go to fly an aeroplane, it's totally different, and it will be, or even let's say use the same car. If you're driving a, what do they call these trucks? If you're driving a truck and you're learning from a very small car, you're jumping steps. And even when you go to a track, you have to learn some things before you start driving it. So you have to practice on what you can afford yourself. Don't go and get a demo account which is bigger than what you'll ever even afford to do what? To put in your real account. Yuga man, I've sent you the pictures. You can post them there too. I want you to share them so that when I continue I can use them. Track official, I was saying back testing goes hand in hand with your strategy. I know you might be new. We'll teach about how to do back testing and how to find a strategy. So don't worry about that. Then after back testing, I'm going to talk about the rest of the steps to take. And the next step that I was talking about was what? Was finding the lot size. Before I think you should note them down. Well, first stage is strategy. Strategy goes hand in hand with what? With back testing. Then the next step will be opening a trade. To open a trade, you go hand in hand with finding the lot size, knowing how much you have in your account, and everything that I'm going to talk about next. The fourth stage will be waiting. Once you place I think it's the third stage. The third stage will be waiting. That's the 80% of trading is waiting, because you place a trade, your strategy, most of the people, if you know your strategy, it won't even take you an hour to find a trade. And if you don't find a trade, it means there is no opportunities for you in the market. Most of the times, that's how it works for me. I can go and do my analysis in less than 30 minutes. If I find an opportunity, I put in the trades. If I don't find it, I wait for the next day or the next hour or the next session. That's what I do. So if you know your strategy, finding a trade to open won't be difficult. After that, opening a trade doesn't take even a minute. Waiting, you don't control the markets. That's why I said it takes 80% of what trading is, because you can wait 2 minutes, 10 minutes, 20 minutes, 80 minutes, 6 hours. Some, as I told you last time, we're talking about different types of traders. Some people even put in trades and wait for years because of their different ways of trading. So that's the third step. Then the fourth is how to close your trade. How are you gonna close your trade? Are you? That's why we're gonna talk about take profit.
Ivan, just before you go to closing, let me invite Mandex Ziza to have something to say. Mandex Ziza, could you unmute yourself and go ahead with your comment or question?
Yes, thank you very much, Sugarman and Mr. Ivan. I am not new here. Last time I was here. And my question has somehow been hinted on by Mr.
Ivan, can you hear him?
No, I
Are you
think we
hearing me?
lost him.
Are you hearing me now?
Mandex? Yes. Please go ahead with your question. Hello, Mandex? Okay, looks like we have lost him. Musta.
Musta is connecting too. Mandex looks like he's on mute. Mandex, unmute yourself, please, and ask your question.
Yeah, I had put him on mute because his network seemed to be having some bit of echoes and it was not clear. Mandex, can you hear us now? Okay. So I have a request from Josh, and
So can you now get me?
yes, I can hear you. Please go ahead.
Yes, sorry for the interruption. So I was asking about the waiting time. So I have been
You're
trying to
asking
trade
about what?
on the 1 hour, but like I can come back after now and there. Like,
Okay. So
so I was saying
Mandex,
like you actually is now sometimes come on the one.
I think, Mandex, what you should do, write your question down and send it to Yugaman's DM. He will read it out for us because
yes,
you're
I think that's a
cutting too
better
much.
way. Yeah, the audio is not clear. So Musta, please unmute yourself and go ahead. Musta, are you there? Okay, cool. Josh, unmute yourself and we'll go ahead.
Thank you for this, Yugaman and everyone. I just want to say I'm actually not asking anything. I'm just commenting. It's my first time to face the trading, and I'll be getting on to try and learn more as much as I can. Thanks for this, man.
Please go ahead. We've been on it for quite now, like 3-4 weeks. We've been hosting this. It's a very, very good space for traders. And please welcome every single Tuesday and Thursday. We'll be here to discuss anything and everything you've got to ask or to say about Forex trading. Thank you, Josh. Ivan, go ahead.
Okay. Guys, please, I want you to like the post that I think it's the second slide that Mr. Yugaman has posted. I want to see if you guys can see it. The caption is position size calculation stroke money management. If you guys can see that post, like it so that because it's what I'm going to be using to teach. I want to see if you guys can see it. And if possible, if you're a trader, make sure you download those images and save them for yourself because they're going to help you a lot. Or put that tweet in bookmarks so that even if you download the images and you lose your phone, you can always come back on your Twitter and find that tweet
Uh,
and use
Ivan,
the
just
picture.
before you go ahead, there is a comment or question coming in from Awil. Awil, please unmute yourself and have something to say.
Hello, everyone. Thank you so much, Mr. Ugaman and Mr. Ivan. It's indeed a pleasure being here. I've been following recently and almost I can say all sessions. And myself, I do trading, but of course, there's a lot to learn along the way. And I'm really actually happy to be here to learn more. And actually, of course, every day, I believe there's so many people, of course, like me here, who are trying to learn and engage with the markets. Most of them, of course, they take it like a gamble. And I would like to ask Mr. Ivan. Usually, most of the people, for example, here in Uganda, most of the people are failing to get a good broker, I can say. What advice would you give to someone who is starting up and someone who will really love to learn more in details? If the books, if there are maybe a website or something, or if there are videos and all that where someone can learn extensive knowledge, and then alongside your explanations here every time they're coming, they have a clue of where and how, they literally understand everything as you go on with the topics being discussed every Twitter space here. Thank you so much. That was my question.
Okay, thank you so much.
Fantastic. Ivan, over to you.
To answer your question about the broker, next week we'll be touching, not next week, Thursday. I'm going to be talking about brokers and I'll give my recommendations of the brokers that I use and the reasons why I use those brokers. So I don't know if they are there in Uganda, but I know there are international brokers, and those who like can use them. About where to go to read and learn, babypips.com is the best website to go to if you're a beginner. Also, YouTube, but not every YouTuber is a good teacher. Some others are being given money by brokers to teach certain things certain ways. So, as I can tell you, don't rush. Most of you want to rush and make money, which is okay, human nature. What I'm going to advise is that stay here. We're going to touch about everything and anything. As I told you, in 2 years, I want at least to have 10 profitable traders who are making 10 million per month in 2 years' time. So, which means I'm going to make sure of that. I'm going to teach you everything. We're starting with spaces which want to go away in the meantime, but as time goes on, we'll start doing live sessions on. We'll do sessions on Telegram, where I'll be teaching for those who join the groups and Discord. Then we'll also take them to Zoom. Then maybe in the future we can have physical classes. So you can go to Baby Pips if you want to learn, and also YouTube. There are some good teachers. I can't recommend any because me, when I used to learn on YouTube, it was a few years back. I don't really remember a lot of channels that I used to learn from. I actually, bad thing, I never subscribed on them, but there are some good channels there on YouTube. But most especially the channels that YouTube recommends that you see a lot of views on are not even good channels. Go to those traders who have less views and are not even recommended by YouTube. Those are the ones who have good information. The ones who have a lot of views are giving information which a lot of people have viewed and are using that information. Meaning, if we are all using the same road to go to a certain place, we're going to cause traffic jam. And in the end, we'll get stuck in the way. So use the road where there are few people, or go where on YouTube channels where there are few people. But as I'll be teaching you here, you'll also know, you can tell a good teacher from a bad one. So I think that answers your question. And please be here. We'll teach everything. Just stay here. You won't regret your time.
Okay, Ivan. So Timo Kemba, if you're there, please go ahead with your question or comment.
Thank you very much. I want to ask Ivan, on a trading day, how do you identify a good currency pair to trade? And the second question is, I have always heard you using the word indices. What are they? And do we really have to get into them right about now as a beginner? Thank you.
To answer your question, first of all, indices, as a beginner, don't even think about it. Those include NASDAQ, they include US 30, they include UK 100, they include US 500, Hong Kong 50, France 40, German 30. There are a lot of them, but please don't trade indices for now. If you're a beginner, indices make money quicker, but also indices lose money quicker, especially if you're trading the US session. My friend, even the London session for the London indices or the Europe indices, volatility is too high in indices. As traders, we like volatility, but as a trader, if you're a beginner, I don't advise you to go for indices. Even gold, don't trade gold, please. It will blow your accounts. Don't give those. I know some of you have seen Pakistanis who come and tell you, let me manage your account. I've been making this money. You've seen them on Telegram. They are a lot. Don't allow anyone to manage your money for trading. Just learn, and once you learn, you will manage your money. if you can't manage your money, what makes you think that somebody else will be able to manage it properly? So don't trade indices, don't trade gold as a beginner. Focus on currencies for now. Currencies have volatility, but not as indices and gold and other commodities. And stocks, you can learn to trade stocks if you have money to invest in stocks. We'll also touch on that, but in the later stages of these teachings. You asked about which currency pairs do you know that I should trade right now, and what time of the day. We talked about the different trading sessions. You can go back and I think, Yuga man, I don't know how we're going to do it, but we need to put our spaces in a specific place where people can easily find them for reference.
By the way, Ivan, on that same point, I have been trying to look out for different softwares that can help me get the recordings from Twitter. So, guys, if you know a better way of how I can download these recordings properly, we can always edit them and post them on SoundCloud. So, guys, if you know a better app or you know a better way, or if you can even do it, please go and download all the spaces we've had and give me access to the audios so I can post them on a SoundCloud channel for everybody to be able to learn from there, but also to keep them as our journey goes on. Thank you. Ivan, go ahead.
Okay. As I was saying, we talked about the different time zones and the different currencies that you can trade. So, I'm not gonna repeat everything, but I'm gonna go through quickly. The different to know the best currencies to trade, you have to trade the major currency pairs. Don't trade exotic, don't trade, for example, the what Mexican peso, those ones, don't trade them for now. That will be a kind of a waste of your time for now, because they can be too volatile and they can be non-volatile. So you might wait for long for them to hit take profit, or they might become too volatile and take you out in a very short term. So don't trade those ones for the time being. Another thing that you have to do is, I've told you, look for major currency pairs, Euro USD, currency pairs that have USD, Euros, GBP, I mean the pound, Japanese yen, Chinese, I mean Swiss franc, New Zealand dollar, Canadian dollar, Australian dollar. The pairs I've just mentioned, look for where they correlate, where they correspond with each other. I will be putting out a list of the best currency pairs to trade that have volatility. I think I'll give it to Yugaman to post it maybe on Saturday when I have time. I'll create it and give it to Yugaman to post it. So look out on Yugaman's channel on Saturday. We'll be posting the best currency pairs to trade as a beginner, and we'll post them. Also, make sure when you start trading, you'll also find those currency pairs that you like most, that you'll find that they are good for you. So as we go on, you'll also realize that by yourself, and you'll start trading those currency pairs by yourself. That's what I can say about that for now. We'll continue touching on everything, and as I've said, if you stick around, by the time we get to the finishing line, learning trading doesn't end, but we'll reach a time where I'll let you guys be, and it will only be questions in the future. And I'm sure you'll have answers to all these things by then. So, yeah, I think that answers you. Timo, does that answer your questions?
Very much so.
Okay, Yugaman, I saw somebody who was here. I don't know where they went on speaker. Yugaman, are you available? Okay, seems like Yugaman is not on.
Ivan, I don't know if you can hear me, but it looks like my audio just got distorted. I just can't hear anything from the space.
I can hear you.
Can you hear me?
Yes.
Okay, cool. Also, I am able to read the captions here. So I hope I can be able to run the space on a caption basis. And you guys can let me know if you're able to view the captions as well on the space. But on my screen, I can see everything going on. Okay, cool. So Ivan, if you've answered Kemba, okay. The other person who wanted to ask a question has actually gone off the chat. So just go ahead with information that you are giving us.
Okay, guys, I see we are about like 30 people in this space, but the picture I want you guys to see that I'm going to use to teach has only like 7 likes. I don't know if you all see it because I don't want to be talking about something that some of you are not seeing. It's the caption on it is position size calculation, stroke money management. Hope you guys are there. I'm going to use it to teach. So our first point was about if you're going to open a trade, what do you do first? You use your strategy to find entry. After finding entry, or after finding what you're going to trade in the market, you come here to this method that I put here for finding the correct lot size to use. For example, if you have an account of $10,000 and you want to risk 1%, you ask yourself, what is 1% of $1,000? 1% of $1,000 is $100. So, as I told you, your strategy will tell you how many pips your stop loss should be. So I am assuming that before you even place the trade, your strategy already tells you that your stop loss will be, let's say, 15 pips, as we gave it as an example here. Your stop loss will be 15 pips, but your stop loss can be any pips according to your strategy. So don't focus on what you're seeing here. And also your risk can be different from what you're seeing here. Your risk can be 2%, 10%. If you're not even scared of losing a lot of money, you can make it 50%, which I don't advise, but if you feel like you have the balls, you can do it anyway. So if you want to